Joe Ficalora, CEO of New York Community Bank Corp. Your stock is down by about a third over the course of the year. Of course, financials are really getting hit. Tell me what's going on.
Well, banks are out of favor. So even though we trade at a multiple that is higher than our peers, our stock is down off of what was a very, very high price. So we are down in line with the banking sector.
Of course, when the stock goes down, the dividend yield goes up.
Correct.
You're yielding about 8% right now, which is quite nice, especially in today's environment.
Correct.
Can you keep it up?
Yes, we established this dividend back in February of 2004. We are significantly better positioned to pay that dividend today than we were in any of the years since 2004.
Now, you lend to multifamily homes in the New York area.
Correct.
Tell me, how's that business right now?
It's robust. We are actually increasing our lending. We're seeing our portfolio grow. We expect to see quarter by quarter our portfolio continue to grow. It is a very strong market today.
You also own thrifts throughout a number of states. How is that business? And what are your depositors reacting to with rates so low?
Well, it's unfortunate that rates are as low as they are. They're low on the asset side and they're low on the liability side. So this is a function of where the Fed holds rates today. The reality is that many people are dependent upon their interest, older people and such. So we do have CDs that have higher rates than we should be paying, but they're still very low compared to historical rates.
And on the lending side, are you finding lots of credit-worthy borrowers? Because the big mantra is, we want the banks to lend, we want the banks to lend. But is there anyone out there that you're finding really worth lending to?
Well, we're a multifamily lender, so the people that we lend to, in fact, are in the market and have the ability to be there because of the way they run their business. That's different than homeowners. The big mistake that has been made by the Fed or by the government is that they're keeping rates generally low, but people are not qualified to get the loan because they don't have enough money to put down or they don't have high enough FICOs. So the people that are taking advantage of these low rates are the people that have money and have properties that have equity in them, and they're virtually refinancing 2 and 3 times in the last couple of years, just reducing their cost and reducing the return to the lender, the bank.
Now finally, in the past, a bank like yours would see lots of M&A proposals with your market cap around
Right.
$5.5 or so billion. Now, with a lot of the big banks sorting out their own problems, are you finding less suitors nowadays, and are you out trying to find some banks to buy on your own?
The reality is that we have seen every major deal in the last several years that has been offered to the street. Often we see the deal before others see the deal. We turned down hundreds of deals over the course of our public life. We became a public bank to do accretive acquisitions. We will have the opportunity to do that in the future.
Thanks a lot.
You're welcome.